Hey there, Wealth Press and Midas Letter viewers, traders, investors. Today, I have a special guest. Mr. Trevor Fencott joins us. He's the CEO of Fire Flower Holdings Corp, trading on the OTC under the symbol FFLWF and in Toronto under the symbol FAF. Trevor, it's been a while. Welcome back.
Thank you so much for having me back. It's good to be back.
Yeah, I was intrigued when I heard that I was going to be talking to you, and I started to, see what I've been missing out on. And here I see this Alimentation Couche-tard has bought 15% of your company. Like, wow, that's a $42 billion company. That's like Constellation Brands doing their first 10% of Canopy Growth. Tell me how that all came about and what's going on.
Well, yeah, there's a lot that's happened. So, as you know, we are a tech-forward cannabis retailer, and as we started to roll out our plan, couche-tard, the owner of Circle K, I think most of your viewers probably know Circle K, perhaps a little more than Alimentation Couche-tard, but they were looking to explore opportunities in the cannabis space, obviously as a convenience-based retailer, and had a lot of conversations with a lot of folks, and really, I think, engage with our tech platform. The fact that we have this Hifyre digital tech platform that allows us to do kind of best-in-class retailing, data and analytics, drive higher value of our customers and higher sort of store performances, and use that in a kind of a roll-up strategy, because ultimately there is going to be consolidation. We're already seeing it, but I think that their view was, look, you know what, this is kind of get the tools here because we know it's going to be a competitive industry. And we're very glad that they chose us. And as you say, they now, I think it's 13%, but there's a path to 50.1%. So there's a series of warrants there that continues to provide working capital to the company and growth capital. I think they go this December up to sort of 33%, and then after that it's 50.1% time. So yeah, we view it very similar to the Constellation Brands deal, and for us it is transformative because. If you look at what we've been able to do together, not only just the tech platform, but we actually have co-located Fire and Flower stores with Circle K stores in Alberta. So we kind of view Canada as a bit of the test market, prove the model, make sure it works, get all the kinks out, make low-cost Canadian dollar mistakes, not US dollar mistakes. So really get the operating model down. But if you look at what we're doing with them, so there's a Circle K store, and co-located with it is a Fire and Flower location that's smaller. It's a 600 square foot store, very, very capital efficient, very capital light, very, very revenue efficient. And you can start to see the beginnings of a hub spoke delivery all wrapped up in a tech platform that really drives growth. And we really found that people hadn't sort of understood that part of our story. And so we put a new deck out that kind of maps out our relationship with Circle K and couche-tard a lot more clearly. And it shows, well, hey, my goodness, these guys have a tech platform that is now, we can see they've got smaller co-located stores that use the real estate assets of our gigantic partner. This is them repurposing real estate they have in their portfolios. That's kind of the no-brainer part of it. And then another announcement we made, I think probably a month or two ago, which again, we were a little surprised the market didn't pick up on this. We are now selling Fire and Flower gift cards in 300 Circle K locations across Canada. So we have the largest footprint in Canada with about 79 stores. And then you take another 300 non-cannabis locations where you've got gift cards being sold. 300, that's a massive footprint. And again, we understand the market's a little scared of all kinds of things at the moment, but we were a little surprised, but that didn't really get a lot of pickup.
Yeah. Okay, so let me ask you this. How much did 13% of Fire and Flower cost couche-tard?
They would say too much. We would say not enough, as always with strategic investors. So the way it works is they have warrant structures. So I think it's about 45, almost $50 million to get to that level, but it's over a couple of pieces. So they put in a chunk for debentures and warrants, and again, the next group, the series sort of B warrants that come in December, those are exercisable up until December, and those are at $1.83, and that gets them to, I think, fully diluted about a 33% equity stake in the company. So, you know, there is a path here. And then after that, there's another tranche of warrants that are exercisable. I think the floor of those is $2, and there's a ceiling of, because we did sort of amend them, but there's a ceiling on those. But again, that's to get to 50.1% of the company.
Wow. And now couche-tard also has operations in the United States, no?
They do. They have 7,500 stores in the U.S. And I believe it's upwards of 6,000 of those sell CBD products, which are federally legal in the U.S. So again, their interest in cannabis in general, if you think about what you sell at a Circle K, this is what consumers want to buy. So they want to buy things like, you know, alcohol where available at, you know, convenience locations, things like tobacco. These are adult use products they're very familiar with, and they understand the growth category there. So again, they've been a very good partner, because you think about how we're collaborating on, you know, the co-located stores, how we're collaborating with gift cards in their stores. You can start to see how this evolves in a U.S. context. And in fact, for us, we just announced on Monday the beginning of our kind of more fulsome U.S. market entry strategy. So we announced on Monday that we are partnered with a group called American Acres, who will be taking royalty-free the tech, our IP, all of our stuff that we've developed here in the Canadian market, which again, I know some people are sort of say, well, yeah, but it's the Canadian market. It's true, it's smaller than the US market, but it is much more competitive. If you think about Alberta has one dispensary per 8,000 people, which is more than Colorado, which everyone would agree is probably one of the most competitive markets in the world. So we've really honed our craft in a very competitive retail market, and now we're able to, you know, project value south of the border into American Acres, who are going to use this very, you know, distinct and unique advantage to kind of go and aggregate and roll up U.S. stores. We'll convert them to Fire Flower. We'll make them better and rinse and repeat. And in exchange, they've agreed to let us acquire them when legal. So we got that time gap there. We've got the air gap between the plant-touching TSX companies and the U.S., but at the deep discount that reflects the value they see in the tech. And I can see the question probably coming, which is, well, what is this discount? We want to put it in our mouth. Obviously, that we consider that, you know, proprietary. But I would say, if you look at it, if you were like a smaller U.S. MSO that was trying to grow aggressively, and you were given essentially essentially given a bazooka, right, to go out and compete with these great tools, this Hifyre technology, Spark Perks loyalty program, all this sort of stuff, what would that be worth to you, right? Knowing that there are bigger MSOs out there, there's a lot of consolidation going on. If you were given a head start and a path to acquisition by Fire Flower to blend into us, you know, whether in the TSX or with our upcoming intent to list on NASDAQ, that's a significant event for them. And so I would suggest the answer would be you'd probably give quite a lot for that advantage.
Yeah, well, that's really intriguing. I've got to be honest. I'm looking at you in a whole new light, because that is, like, I think that's a better model than Canopy. Honestly, I think it's so smart, and yeah, I just can't believe it. So you have the right to acquire them, 100%.
100%. Yes, when legal. And
that,
you know what?
Is
I got to tell you, we did take a page out of Canopy, because I agree. I think the Canopy and the acreage deal was not a great deal for shareholders of Canopy, because what you were doing was, in those days, LPs were trying to project capital south of the border. They were trying to deploy capital there. So that structure actually was very, very different. And we learned from that. That was sort of, you used capital to almost sort of get shareholders to agree to your deal. And it was dealing with a very big company. So we thought, well, you know what? Let's think about this for a second. The structure is okay. It's just the particular deal wouldn't have been one that I would do, right? So what if you grew together? What if you built that value together? And what if you actually had something valuable to begin with? Because you'll remember when Canopy did that, in those days, I think cannabis, it's fair, was still a raw materials game, and there was a lot of capital, so you're trying to find a way to put it to work. But we've actually spent the last 2.5 years building something that has an acknowledged value. Like it's a operating model tied together with technology that is hyper competitive, allows you to compete, well, that has value. In the US, you can get capital. That's not the problem anymore in the US. The problem in the US is that no one has built an operating platform that's tech forward and competitive because they haven't had to. The operating model was, I've got a store. That's my model. I've got a cannabis store. People like cannabis. They'll come into my store. And if I can do that enough, maybe I'll open a second store. But that's not going to work when it's competitive. And so that's where we started.
Wow. It sounds brilliant. What is the footprint of American Acres currently in the United States?
Well, the footprint of American Acres so far is small, right? So the first store rollout will be in Palm Springs, and we expect that in first half of this year. So that will be, again, you will see a Fire and Flower branded store with all of our Hifyre tech in there, our Spark Perks customer engagement program, all of our, our kind of like our signature 6 screens. We're going to really demonstrate that this is a powerful operating system that is a competitive advantage. And then we want to help American Acres grow like a weed because it's both of our interests.
Unintended.
Yes.
Great. So now on the Canadian side of things, do you service the medical market as well as the recreational market?
No, we are strictly adult use, and and I'm sure that there's some crossover, to be honest, with people coming out of the medical market or people that are using it for health and wellness purposes. But our goal, our MO, is adult use in Canada.
I see. Is there an intent to enter the medical side at all?
No, I think that really you have to decide what you can be best in the world at. And I think that the licensed producers really have a good handle on the medical market. I think that they're licensed for that reason. And so I think that it makes sense for it to stay there and siloed. I think with us, as we start to see the perhaps distinction blur a little bit between what was traditionally medical for things like Dravet syndrome, like some very, very serious medical conditions, and things like insomnia, or things that people might also have a glass of red wine to kind of self-medicate. As that line becomes a little more blurry, I'm sure we'll see some health and wellness uptick in the stores, like similar to Whole Foods. But we really want to make sure that the medical market is with the medical professionals.
You bet. You bet. All right. Well, Trevor, that's really fascinating. I'm going to leave it there for now, and I'm going to go and study your financials a little more closely. I think I'm about to become an investor, and because I had no idea you had this whole thing going. It's really impressive. Congratulations on everything. We'll look forward to having you back soon. Thanks very much for your time today.
Thank you very much for having me. I appreciate it.
Yeah. Bye for now.